Hey guys, welcome back to the channel. So one of the things I wanted to talk to you about in the investing world is, the best sectors to invest in to beat the market over the long term, right? Not the short term, because trying to beat the market in the short term, that's just gambling, right? And I don't recommend anyone get into a, pretty much anything that has to do with trying to beat the market in the short term, right? Trying to invest in something and, double, triple, quadruple your money in a couple days, a week, whatever. Like, that's just, don't get into those things. If you're into, like, I've touched on those subjects of how to do some of those things, but I personally don't recommend it, right? But if you want to beat the stock market averages over time, one of the ways to do it is to invest in the best sectors of the market. Right, there's some mutual funds and ETFs that are going to invest in sectors that tend to grow more rapidly than the economy. Right, what we're going to try to do is learn more about these sectors and why they have such a really good outlook. Right, so you might hear about investors, traders, fund managers, who say that, like, trying to beat the market. Well, this phrase just means that they're searching for returns that beat a broad market index, such as like the S&P 500, right? As an investor, you want to get the highest returns possible, but you want to do that with the least amount of risk. Well, to do that, you'll want returns that are higher than the S&P 500 or, the Dow Jones Industrial Average, right? One way is to invest in market sectors that perform higher than the indexes, right? Sector funds are among the best ways to invest in areas with higher returns. Of course, no one knows which stocks or sectors are going to beat those indexes, right? Well, the best you can do is look at past returns and make educated guesses about the future. Some market sectors you can look into include technology, healthcare, the financials, consumer staples, consumer discretionary, industrial, energy, utilities, you know, and choosing the best sector to buy for future returns. It doesn't take a lot of luck or a lot of research. It still takes some research, right? But realistically, all it takes is a brief study of trends and, like I said, just a little bit of research on the past performance, right? So to do that, you basically, you're just going to look over each sector and choose, we'll say three that have performed higher than the S&P 500 over the past 10 years. Well, let's jump into that. Let's talk about three. The first one I want to talk about is the healthcare sector. An aging population and rapid advances in biotech make the healthcare industry a tempting option. This space has led all other sectors in growth over the past decade, and it will no doubt continue that trend in the future, right? As a side note, the healthcare sector is considered a defensive sector, or one that isn't affected as much by recessions. So the healthcare sector is pretty broad. Its businesses include, say, hospital conglomerates and institutional services. Other firms in the industry are insurance companies, drug manufacturers, biomedical companies, or medical instrument makers. Many sectors are doing poorly due to weak economic conditions. The healthcare industry performs well because people still need to see their doctor, get medicine, and regardless of the state of economy, right? The next sector that I really want to talk about is technology. All right, this is the big one. This is the one that everybody tries to get into. Here lately, fintech has exploded in the past couple of years. Right, everybody's trying to make a fintech company. Right, well, fintech stands for financial technology. So the tech sector, it's at the tip of the innovation sphere. Right, it's also the driver for the information and data explosion, right? So tech has shaped the economy for, just for decades, right? This trend looks to continue for many more decades due to non-stop research, constant research, right? A little note about this, like, just think about this. Less than 15 years ago, there was no such thing as an iPhone, right? Keep in mind that other tech and tech companies will come along with new products and services, right? But now you think of, Apple, everyone, almost everyone has an iPhone, right? Like, and 15 years ago, it didn't exist, right? So the tech sector, though, it's going to be a group of stocks that can contain computer hardware manufacturer and a bunch of other companies that make software, different types of electronics, stuff like that. Well, they also provide services and support for their products. Most tech companies, they also offer information products or, say, business data processing. So, some examples of these, like I mentioned earlier, Apple, Microsoft, Google, and of course, one of the big ones, Facebook, right? Facebook is, man, they're everywhere, aren't they? Well, the next sector, the third and last sector, to talk about, it's going to be consumer discretionary, right? Because the consumer discretionary sector includes firms that provide products and services that are for more luxury or pleasure, right? So, also called consumer cyclical stocks, they are seen as cyclical because demand for products and services in this sector tends to be higher during certain times in the business cycle, such as the growth phase, right? A lot of consumers tend to demand products and services when they have more money and feel hopeful about their jobs and finances. When the economy, shrinks down a little bit, the demand for these stocks also declines. Some examples of these are going to be Apple, Disney, Starbucks is another big one, right? Well, let's get down to it. What's the bottom line? Well, the returns of the past do not guarantee future results. You can choose to invest in sectors that have performed better in recent history. It's possible that the healthcare and tech sectors will keep up their growth trends, but there's no guarantee. Before buying sector funds, you should keep in mind that putting too much capital into one sector can increase the risk to your portfolio. You also should not try to time the market in the short term. One good portfolio strategy with sector funds is to add them as satellites to diversified core holdings. That way, you're not putting all your eggs in one basket, so to speak. You're simply putting more eggs in a few more select baskets, right? So some of the things to talk about is like, when's the best time to invest in defensive industries if you're using sector rotation? Well, defensive industries are meant to prevent steep losses during downturns, so the best time to invest in the sector is when the business cycle is at its peak. In reality, it's extremely difficult to recognize a peak as it's happening, but if you can manage to pivot to defensive sectors just before or at the peak of the business cycle, you may be able to protect yourself from some losses. Well, how many sectors are there in the stock market? Well, the classification standard recognizes 11: energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, communication services, utilities, and real estate. Okay, well, how do you identify top performing sectors? Well, identifying top performing sectors is similar to identifying top performing stocks. Charting and technical analysis can help you identify which sectors are in an uptrend, right? And one of the easiest ways to analyze sector performance is to look at the charts for corresponding ETFs. As an example, XLV tracks the healthcare sector, and technical analysis on the price of that can give you insight into healthcare sector as a whole. So hopefully you guys got some pretty good information out of this, and just remember, try not to time the market and try your best to invest for the long term, right? Long term is you're looking at least 10 years or better, right? I really hope you guys enjoyed this video. If you did, go ahead and give it a like. If you're not subscribed to the channel, go ahead and subscribe to the channel. Until I see you guys in the next video, y'all be safe.